The decline continues for crude there. The NYMEX crude prices have declined yet again, more than a percentage point of a decline coming in for the Brent and NYMEX. Below 90 is how NYMEX is trading, and 105 is just about holding for the Brent crude prices. We have seen a bit of a decline coming in for the gold prices as well. Remember, yesterday was 1% of a cut coming in. 1580 has continued to be quite a resistance, and today we've declined nearly 0.5%, so 1550 has been broken on the lower side. We're also joined by now Ram Pitre. He's head research ITI in Mumbai, and Vijay Bambani is with us in the Mumbai studios. Ram, let me start off with you. And how are you looking at the crude price and the kind of decline that we have seen? How much of a further decline are you expecting?
On the international market, 89.10 or 89.15 level is a very important level. Earlier it held very well, and it has bounced back to almost 92 level. And again, a break of 89.28 suggests that the further downside pressure likely to continue. But on an intraday basis, on domestic market, because of the rupee depreciation and likely to continue in the near future, I think I will bet on between 5,000 5,010. If you get an opportunity, you can buy domestic oil with a stop loss of a stricter stop loss of 49.80. This is a last chance for the bulls because the international $89 was broken convincingly. The next important on international market is 84, and then comes to 76. So the market closes below $89, then definitely it will go further down to 84 level, the next target.
Vijay, what's your sense on where the crude prices are headed? Because the last week was bearish. This week it started pretty on the bearish note yet again. Further declines for you as well?
I think so, yes. I've talked about 89.5 as a near-term support all of last week, and that's already here. So let's take the supports in a very graded and calibrated manner. I think 88.25 would be the next support in WTI crude. And in terms of the domestic MCX strategy, I would feel somewhat comfortable by getting my feet wet by initiating small-sized short positions at 5050 in the prompt month series. I would hold those shorts with a stop loss at 5075 and expect to book profits between 5,010 to 5,020. And should the 5,000 level be taken out, I would take a relook again. But at this point in time, 5010 to 5020, I would extinguish my shorts and take money home.
Right, and it's not just the crude prices which are on the weaker side. There has been a decline in the gold and silver prices as well. The Indian markets and the global markets both have seen a decline. Ram, what's your sense? The precious metals have continued to decline near term, slightly medium term. What's your sense? What is the range you are working with?
The pressure on the euro and increase in demand for dollar is likely to keep the precious metal from here onward under pressure. The important level on international market was 1,523. From there, it has gone to almost $1,790. And again, it has fallen to 1,527. And the bounce is not coming to, it is coming to almost 1,580, 85 level. Looks like we'll go further down to almost 1,505, 1,475, and the key, the important, the level to watch is 1,404. So I think a sell on a rally still maintained only because of the rupee depreciation on the domestic front. It is somewhat, it is holding that level. But if once that $1,523 international level breaks, the further sell-off might come in rupee terms also. So I suggest going short on gold domestic market between 28,875, 28,920 or 50 level, with a stop loss of around 29,000 for a target price of 28,800 or even 28,650 can be seen. But overall, I feel that the present trend in international market, the gold international, the price in terms of dollar is relatively closer to a top rather than a bottom. So sell on a rally I still maintain as long as international market trades below $1,587 on the upside.
Vijay, what's your sense? Of course, you haven't been buying into the precious metals for some time now. I mean, kind of levels that Ram is coming out with is quite on the bearish side. How are you looking at those levels on charts?
I would concur, Manisha. As recently as yesterday, I said unless you're buying for physical investment deliveries, I would keep my hands off purchases because unless silver manages to stay above the 55,400 levels, unless gold manages to stay above 29,200 levels, the bulls are unlikely to come back in a hurry. So it's a sell on rallies, even from my side. I think 28,625 levels would be a support on gold in case you're going short, and 53,400 would be a support for silver in case you're going short. And at this point in time, I think the bulls are likely to sit on the fence. So buying support at lower levels is not forthcoming.
Ram, what's your sense in case of silver prices? Of course, that one also has been declining, but what levels are you watching out for on the lower side?
On international market, we have initially seen a low of 26.08 and 26.17. And the rally has almost gone to around 34 and again back to almost 26.78. The strength is definitely somewhat missing on the upside. So it has again bounced back from 26.78 to 28.69, 28.80 level, and it has a steep fall we have seen yesterday and today. Looks like the present trend likely to continue, and we may see a break of the previous low of 26.08. And the key important levels for silver in international market, 25.25 likely to hold, and we are heading towards that level. Coming back to domestic market, 52.55 level is quite from last 1 month it is holding. So sell on a rally, even if today's market in intraday basis, say around 53,800, 53,900 if you get, or in a rally you can sell with a stop loss of 54,000. Or target is around 53,550 and 53,200 can be seen.
Ram, there have been lots of these talks about China coming out with some significant stimulus, even if not massive stimulus. Significant really has been the term used. Do you think that would support the base metal prices, or the rest of the decline in other commodities and the concerns from euro really would put pressure in that sector as well?
Overall, you see, Manisha, that from last 6 months to 6 months to date, most of the base metal pack has not given a positive return, except gold and some in agro commodities, soya meal. Rest all commodities has given a negative return, and the trend likely to continue. So in base metal pack also, I think sell on a rally should be adopted on a regular interval.
Vijay, what's your sense? Where are the base metals headed for the very near term? How are you trading them today?
I think copper is showing signs of weakness, and it might just surrender a little bit of its gain that it reported in the last few trading sessions. So I would feel comfy shorting copper at the current levels, holding the shorts with a stop loss of maybe 426.5. I would expect to book profits close to 421, 422 levels. Just to be on the safer side, I think I would initiate shorts in the mini series rather than the regular lots. And should nickel, which is currently trading close to the 921 mark, should it actually start trading consistently below the 920 levels, I think it's possible to see lower levels of, say, 905 to 908 band. So should nickel surrender and stay below 920 levels for half an hour or so, I might just initiate fresh shots on this metal also.
All right, so a weak day for the non-agro commodities, and sell calls coming in from our experts for the intraday market as well.